there any members of the public wishing to comment on items not on today's agenda? Seeing none, let us proceed to the first item,
Okay.
Mr. Samario.
Thank you, Mr. Chair. Mr. White, I'm Bob Samario, Finance Director, and we're here to talk about two reports, actually. The first is the fiscal year 2011 Redevelopment Agency report, and then the city's comprehensive annual financial report. They're both CAFRs in a sense, and we'll talk about what that means. We're not really going to get into too much of the finances of the numbers because, you know, the results of operations for the year, primarily the general fund, we presented to the committee and council over the last year, and we did a final report, I think it was in September, to show you the final numbers for the year, and they really haven't changed. So we're here to talk about what a CAFR is, some key aspects of it, but also talk about the audit process, because that's important, and what goes into auditing in this document. And we have Mr. Kikuchi here from our CPA firm who can speak to that process. So that's really the scope of what we're going to cover today. And we're going to start, as I said, with Mr. Bossi covering the RDA first, talk about some projects, and we'll get into the city's CAFR.
Great, thank you. Mr. Bossi?
Good afternoon. Again, my name is Brian Bossi, and I'm the Housing and Redevelopment Manager with the city. And I am here today to talk about the Redevelopment Agency's annual report. This is a report that we put together every year. It's required by the state. And it also requires approval before we send it to the state from the City Council. And the report must contain four primary things. One is an independent financial audit. We also have to have a report on our compliance with laws and regulations, a report on our projects and programs over the past fiscal year, and a report describing our housing activities over the past fiscal year. And what we do is we take all these and we spread them amongst three primary components, and that is the State Controller's Report, our CAFR, which I believe you have a copy of, as well as our State Housing and Community Development Housing Report. And so we put that all together in a package. Most of it is submitted electronically anymore, and we shoot that off to the state after the City Council and the Finance Committee's approval of our report. So with that, I'm going to jump into the financial section. Very briefly, the agency received an unqualified or clean opinion on the presentation of the financial statements. There were no instances of noncompliance with community redevelopment law and other regulations that impact the redevelopment agency, and there are no material weaknesses in the internal controls. Next, I want to talk a little bit about our program section. This is some highlights from our redevelopment projects as well as our affordable housing projects over the past year. This is always a good exercise for us as staff to the redevelopment agency to look back at what was completed over the previous fiscal year, look at where we're at now, and then also look forward to what we have on our plates for the future. And it really is a collaborative approach, and it starts with our talking with the Finance Committee about projects. It then moves up to the Council and approval for projects that they'd like to see completed. And it eventually trickles down to our Public Works and Park staff, who we have doing a lot of our project management, and then, of course, our Housing and Redevelopment staff, who do the day-to-day activities of the redevelopment agency. A huge component, obviously, is our making sure our finances are in order, and our finance department does a wonderful job of that, so I'd like to thank them. We couldn't do it without them, that's for sure. Currently, we have a total of about 25 capital projects and a little over $25 million in funding for those projects. Our estimated tax increment revenue for the current fiscal year is a little over $20 million, with $16 million of that going towards redevelopment activities and a little over $4 million going towards affordable housing activities. Our first program section that I'd like to talk about are cultural arts. The Redevelopment Agency Board has long recognized the importance of a thriving arts community and how that relates to a thriving downtown. And the agency board does that in a number of ways. One is through the development of art in our capital projects, and the other is through the promotion of cultural arts in our downtown. The photo at the top of the screen is one of 6 art installations that was a part of our West Beach pedestrian improvement project along West Cabrillo. And it has 6 different installations, all celebrating various points of history in the city of Santa Barbara. So that's an example of how we incorporate art into capital projects. On the right, we have a different way of how we promote the arts, and that's through working with our downtown organization and their efforts to promote the cultural arts. And you also help with partial funding for our First Thursday program, not our First Thursday, but the Downtown Organization and County Arts First Thursday program, which is a highly successful event, as well as an annual art symposium that's held in April of every year. That's put together by the County Arts Commission. And on the lower left, we have a project that we continue to work on with the Santa Barbara Arts Collaborative, and that is a community arts workshop, which will eventually hold space for set design. There will be some gallery space there. There will be office space, all for these different components of the arts community that have been kind of pushed out of the downtown with development over the years. It will also provide a permanent home for Summer Solstice Parade for a few months out of the year. The Redevelopment Agency Board has also been very involved in parks, both in their renovation as well as production. Up on the upper right, we have a project that we're currently working on, and that's the Chase Palm Park electrical and utility upgrade. What this project will do will replace about 40 light standards in Chase Palm Park, as well as improve the utilities there. Very highly used park, and the idea behind this is to make it user-friendly. There are a lot of community events down there. It'll make it a whole lot more user-friendly for those events, including the Parks Department's summer Concert in the Park series. On the lower right is the refurbished Curio Rec Center, approximately a $6 million project that completely renovated the Curio Rec Center, including ADA access issues, the installation of an elevator, new restrooms, new office space, new dance and program space, as well as a brand new ballroom. Again, a very highly used civic center in downtown Santa Barbara, and that was opened on September 1st of this year. And on the left, we have a number of restroom renovation programs that we're working on with the Parks Department, including both at Chase Palm Park as well as Chase Palm Park Expansion, and 2 other restroom renovation programs at Pershing Park as well as Plaza Del Mar, all very highly used and in much need of renovation. Those will all be complete by the summer of next year, and which, again, will be very helpful for the community, both tourists and the locals.
Mr. Bossier, a question from...
Oh, where's Plaza Del Mar? Which one is that?
Plaza Del Mar Park is located, if you know Pershing Park on Castillo and Cabrillo, there's the band shell and there's a restroom located close to there behind the Santa Barbara City College baseball field. That's the Pershing Park restroom. And then up at the other end of the public tennis courts there, that's the Plaza Del Mar. Or maybe I have those reversed. But those are both at that particular area. Flip those. Yeah, Plaza Del Mar is next to the band shell, and Pershing is up at the other end. Next, we have our downtown and waterfront. The photo on the upper right is the East Cabrillo Sidewalk renovation that finished out the sidewalks from Milpas Street up to the Cabrillo Arts Pavilion. And by completing that, we now have a completely new promenade from the Cabrillo Arts Pavilion all the way over to the working harbor. On the lower left, you have our West Side Center playground improvements. One of the very few areas in our West Downtown that has park space or space for children. It was a complete renovation of the park space, new landscaping, redone parking lot, as well as new park equipment, and also a community mural that was developed. Furthermore, in our downtown area, on the left we have a small but important project, which was the replacement of a number of streetlights on Brinkerhoff Avenue, a very historic street in downtown Santa Barbara. The agency board has then used that as kind of a springboard to work on our Lower West Downtown street lighting project, which is also in the works and should be completed in the next 3 to 4 months, which will improve street lighting along Haley Street and some of those other Lower West Downtown streets. There are also 2 more phases of that will completely address basically from Curio Street all the way down to Haley Street, so that entire neighborhood. So again, using Brinkerhoff as a springboard to improve the safety of the Lower West Downtown area. On the right is a photo of the soon-to-be complete and renovated Fire Station 1 administration offices. Fire station staff, administrative staff are due to move in there in mid to late January. So this was a former muffler shop. It's always been city-owned, but it's being completely renovated to LEED standards and will be open for business by the end of January. Moving on to our affordable housing program. It's been a very successful program, and the agency board has been very diligent in how they spend their affordable housing funds. This is Artisan Court that was completed in the spring of 2011. It's a housing authority project that includes 55 units for downtown workers, youth aging out of foster care, as well as homeless. And this is on East Dakota Street. Right across the street is the mom's property, which is being developed by Transition House. The photo on the upper right is actually taken from Artisan Court across the street to the mom's property. It includes the renovation of 8 existing units that are currently over the Transition House Administration Office, as well as these new 8 units, and it includes a child care facility, and they are due to be complete in the spring of 2012. So it's coming along very quickly, and we look forward to the grand opening of that project. And lastly on our list to talk about today is 2941 State Street. This is a housing authority project. Housing authority, with the help of the city, went in and purchased 6 one-bedroom units and has been refurbishing these units. On the lower left is the refurbished kitchen area of one of the one-bedroom units. I wish I could have squeezed in a before photo, but it's quite different than what you see there today. But this is another way that affordable housing is provided in the city, and especially in the downtown area. Again, this is a housing authority project, and we look to continue those successes in our affordable housing program as well. So that, of course, is just a highlight. We've been much busier than that. We've had a lot of projects being completed over the past few years, and we look forward to more of those in the future. And I'm happy to answer any questions that you may have.
Don't appear to be any. Thank you.
Okay, so we can move on to the city's CAFR, and Ms. Ruby Curio will be covering that piece.
Okay, thank you.
Good afternoon. This is Sorry about that. The city's comprehensive annual financial report for their fiscal year ended June 30th of 2011. And this is the outline of my presentation. I will give a background of the report, the layout and contents, and then some financial highlights, more of a broad overview, and then some more detailed analysis on the general fund. And then I will turn it over to Rich Kikuchi for the audit requirements and results of the audit. What is a CAFR? It is a comprehensive annual financial report, and it includes information not required by financial reporting regulations. A CAFR goes above and beyond what's required by state law in the city charter. It also has additional information that is included in order for the report to qualify for participation in the GFOA award program, and that's the Government Finance Officers Association award association, where municipalities submit the report that meets really high standard financial reporting requirements. And so, like I said before, it goes above and beyond what's required. It provides the reader more information about the city's finances, as well as other information about the community, such as demographic and economic data. And it does meet a high standard of excellence for the city. Why is a CAFR prepared? It is required by the city charter. It has to be prepared and audited by an independent CPA firm. It's also required by state law. And it helps when issuing bonds. Bond rating agencies look at the city's report, and if it has a CAFR, it also speaks to the financial management of the city, which they do look in assessing the city's financial position and determining interest rates. It also communicates important financial information to the public. The primary focus of the CAFR is to provide entity-wide reporting, and this is a new standard that went into effect, GASB 34, in fiscal year 2003, and it presents the financial position and results of operations of the city as a whole. We classify our operations between governmental activities and business-type activities. reports the financial condition of the city at June 30th, and that statement is referred to as a statement of net assets. And it reports the results of operations, which is referred to as a statement of activities, and that shows whether we are better off or worse off after concluding the fiscal year. These statements also mirror private sector reporting in that they're full accrual basis. We report long-term assets and long-term liabilities, and that is the first time, well, since 2003, that cities, government entities, put all this information on the face of their financials, long-term perspective. We also provide individual fund information for governmental funds. That includes the general fund, our special revenue funds such as Measure A, capital project funds like creek restoration and street capital funds. And the focus is on how much is available to spend. We report results of operations, increases or decreases to fund balance. And we also measure budgetary compliance. Throughout the year, the City Council approves amendments to the budget. And this is the report that comes back and shows whether management complied with that adopted or amended budget that was approved by the City Council. For proprietary funds, that covers enterprise funds, which are our waterfront, water, sewer funds, and internal service funds. And they're similar to entity-wide statements, but at an individual fund level. So we get to see results of operations by each type of enterprise fund. Layout and format of the CAFR, we have 3 sections. Our first section is the introductory section, which starts with a letter of transmittal. It's a short letter that talks about the audit process and also the economic outlook for the next year. It includes the GFOA award certificate for the prior year that we did receive, and we will resubmit this year's report as well to the GFOA. We do believe it still meets the award program requirements. And then it has other information on the city structure, such as organizational charts, city officials, boards and commissions, that type of information. The next section is the financial section, which is covered by the audit opinion. The first part of that section is the opinion letter from the independent auditor. We did get an unqualified opinion for our report for this fiscal year. It is followed by management's discussion and analysis, which is very similar to the budget message that you will find in your budget document. It's an overview of the city's position and activities, and if you're a non-finance, non-accountant type of person, this is the best place to get a good feel for what happened during the year. The basic financial statements is the section that is required by the city charter and by state law, and that includes the entity-wide statements, individual fund statements, and the notes to the financial statements. The notes are detailed explanations of some of the major amounts that are reported on the financial statements. It's a lot of narrative information. And then last, the combining statements, which covers all of the funds. Our third section is the statistical section, which is not audited, but it's just additional information that might be interesting to the reader, 10-year history of revenues and expenses, assessed valuation of property for the entire city, demographic, economic information about the community and population. Financial highlights. This is our entity-wide statement, and like I said, we have two categories. Governmental activities includes general funds, special revenue funds like Measure A, CDBG, and capital project funds, our street capital, creek restoration. Business-type activities includes all the enterprise funds, waterfront, water sewer, downtown parking. And so we look at the first category, we see total assets. Of our total assets, they are at $1.1 billion at the end of fiscal year 2011. And the largest component of that is capital assets at $806 million. Those are not liquid assets. Those are just, that number really reflects how much we've invested in the community to improve our infrastructure, streets, buildings, those long-term assets that provide services. The next section is liabilities, and again, we are now reporting long-term liabilities on the face of the financials. So for governmental activities, we see non-current liabilities total $72 million. Most of that debt is redevelopment agency debt from tax allocation bonds that are still outstanding. For business type activities, that non-current liability amount is at $128 million, which covers debt of the water fund, the wastewater fund, which is certificates of participation, revenue bonds, loans to the state. And our last section is the net assets section, which is similar to the equity section of a private sector company. We have broken down net assets into separate categories. Invested in capital assets, again, pertains to our capital asset investments, and those are not spendable funds. The next three categories are restricted, which are monies we have available but are restricted for specific purposes. And then we have that last row of unrestricted. For governmental activities, it is $22 million. For business type, it is $86 million. However, it's important to note that even within these categories, we have further subdivision. Like I said, there's a number of funds that make up these two categories. So we further restrict this unrestricted amount. For example, in business type, we have $86 million, but within that we have airport reserves that cannot be used for water activities or downtown reserves that cannot be used for golf activities. So they are further restricted within their classifications. This is our statement of activities, and here we're looking at expenses incurred to provide certain programs or services to the community. That's our first column. The second column is program revenue, and that is revenue generated by those specific programs. The purpose of this statement is to show what our net subsidy is to those programs. And that are really funded by general revenues, mostly taxes. And so we see that our largest service is public safety. It's over 50% of our total governmental activities, which is actually very common. Most cities find themselves in that same level. The general revenues down below, taxes, $92 million. That's our sales tax revenue, TOT, property tax, UUT, and that we use those taxes to fund those subsidies from up above. The transfer line you see there for $29.5 million, the City Council approved a cooperative agreement with the agency in June of 2011, and that called for the transfer of assets from the agency to the city. As part of that transaction, the city had to record a transfer from the agency to the downtown parking fund for the transfer of parking lots as a result of that change. And so when we look at the change in net assets for governmental activities, we see it looks like a negative $9.9 million. But really, if we were to add back that transfer of 29, the change in net assets would have been a positive about $20 million. This is our business type activities. It's the same format, the statement of activities, and when we look across, our net subsidies are a lot lower, and that's because enterprise funds are really self-sufficient. They support themselves, are not supported by taxes. So we charge the users of those services sufficient revenues to cover our costs, our operating costs. I would like to call out Waterfront. It reports program revenue of $31 million and expenses of $29 million. So it brought in a lot more than it expensed. But then again, those positive numbers are then used to reinvest in our infrastructure. That transfer row, again, we see that $29.5 million, and that's a transfer that came from the governmental activities for the transfer of the parking structures to the downtown parking fund. The change in net assets is $32 million in the positive, but again, if we pull out that 29.5, we still have a positive change in net assets of about $2.5 million, which is typically what we report on an annual basis. We are now going to present information on the general fund, the balance sheet. And our total assets for the general fund are just above $35 million. Liabilities, 8.8. And if we look down at total fund balances, $26.5 million. The fund balances category looks different than we have reported in prior years. We had to implement a new standard in accounting, GASB 54, which requires now new fund balance classifications. And we will be coming back to the City Council during the current fiscal year to get a more specific definition of each of these categories. The unassigned section, $17,769,939, is our reserve policy amount, which includes the $1 million for capital, the economic uncertainty and emergency contingency amounts. This is a summary of our revenue activity for the year. Our total amended budget for the year was $100,573,807. Our actual was close to that, slightly higher. We had a favorable budget variance overall of $163,353. There was one major budget amendment that occurred during the year, and that was to increase the transient occupancy tax by about $900,000. So the revenues, the total tax revenues, did show a significant increase compared to our original budget. On the expenditure side, all our departments were under budget, and it again was a favorable budget variance of $3.3 million, and that reflects on all of the departments making an effort to manage their budget closely to avoid the use of reserves or overspending. This is a summary of our results. It summarizes the previous two slides. We can see that we had an excess of 3.5, and this is the budget comparison. And so our fund balance ending was projected at $23 million. We ended the year at 26.5, and a positive budget variance of 3.5. And now I will turn it over to Finance Director Bob Samario, who will cover a couple of footnotes.
Any questions on the previous information?
Okay. Mrs. Self.
Is it possible to get a breakdown of the unrestricted funds that are restricted? In what way?
Absolutely.
There is that in here?
Sure.
What page?
Mr. Chair, well, not in the financial statements so much, although we can look at what page would that be, what footnote, where we have a little more detail. That's what's shown here of how we break down the various funds or at least activities into the various components for the reserves.
It's note 10.
So if you look on page
65 and 66.
Primarily page 66, you'll see some information there.
And that only covers governmental activities. For the enterprise funds, it would be page 30 and 31.
Okay. So this includes everything in that figure that was unrestricted and showing how it is restricted.
That's correct.
Okay, thank you.
Sure.
The other one on slide 21, it shows revenue for the administrator's offices. Could you explain that?
Yes, I believe that includes the city TV program within that department, and they generate certain revenues, fees, particularly like when they work for the airport, taping those commission meetings, and even like Goleta as well. So they do bring in some revenue.
And is that also include the inter-city transfer? Is that counted as revenue?
To the extent that they're providing services to non-general fund departments like the airport or water department, they do charge them for those services, and they're recovered as revenue or shown as revenue in their department.
I guess what I'm wondering too is I'll think of it in a clearer way and then I'll get to it.
Okay.
And then where it shows the enterprises as far as net, that net figure, does that include the reserves, or is that not include reserves?
And
Where we're showing the,
slide are you on?
let me see,
Go to that slide.
Didn't write that one down, but it was about the enterprise funds.
That just shows current year activity. It does not include reserves that have been carried over from year to year. That's just 1 year snapshot of activity.
Okay, so where the water, let me see, slide 22, where it shows the water had an increase of 1.7 something, that is
Right.
outside of the reserve.
It is. What that represents is, what are they going to be adding to reserves at the end of the year, or what did they use reserves from? And so in this case, the water fund, generally speaking, they were able to generate more revenues than expenses, although part of that probably was spent on capital. But, if they had a surplus of 1.7, that would be added to whatever reserves they had at the beginning of the year. And so the previous page and other sections within the financial statements, and I can point them to you, you could see the water fund's reserves, where they were at the beginning of the year, how this factored into that number, and then what it was at the end of the year. So you can see what the total reserves pictures are at the end of 2011 and at the beginning of the year as well.
Okay, thank you.
And afterward, I can show you where that's at.
Thank you.
Any more questions?
So we're going to just talk about a couple of footnotes that I think are important. There's a lot of discussion, or has been a lot of discussion on pensions. So this is a footnote that at least covers what I think are the important aspects of discussions related to our plans. We have 3 plans, one for miscellaneous employees, which is everybody but fire and police, and then we have a safety fire plan, and then a safety police plan. And this gives you, I think, really helpful information that describes or indicates what's called the funding status, how we're doing along the funding line, if you will, to get to the monies we need in order to fund our total liabilities. So one thing you'll notice is the first column that says fiscal year. This relates, of course, to fiscal year 2011. That's the report and the capital we're dealing with. Unfortunately, the data that we have in this report relates to a valuation data prepared 3 years prior to that, and PERS is always 3 years behind. And 6/30/08, or so 3 years ago, more than 3 years ago, that was right before the recession hit. So we know things have gotten worse since then. So this is a snapshot 3 years ago, and we know what's happened since then. But in any case, the first column of numbers is what they call the accrued liability, and this represents the amount of money we're supposed to have at the end of June 30, 2008 to fund our obligations. And I kind of think of it in simple terms, as if you're trying to build a college fund for your child, and their first year. And by year 18 they need $100,000. Well, that every year you have to put money aside, and this measures, for example, year 5, are you on track or you're not on track. So that's really just that measuring where we're supposed to be in terms of money in the bank. The next column tells you, at least supposed to tell you, how much money you in fact have in the bank relative to what you're supposed to. So you could see, for example, into the miscellaneous plan, according to the evaluation done, we should have $325 million, almost $326 million in the bank, but as of that date only had $264 million. I will mention that it's called the actuarial value of assets because in real terms it doesn't really represent the true investment value. And they do that because they have the ability to sort of manage and change those valuations in order to keep the rates more smooth. It's one of the smoothing techniques that they use. Otherwise, variations from year to year and those investment returns and those asset values could have dramatic impacts on rates. So those numbers fluctuate within sort of a corridor. For example, now I know that the real value of assets are less than what they're using for actuarial purposes, for rate smoothing purposes. But in any case, based on that actuarial value of assets, we are unfunded or have an unfunded liability of about $61 million, which represents a funding status of 81%. So we're, ideally we'd be at 100% if we were right along that funding curve. We're at 81%, at least as of June 30, 2008. I think we're in the 60s as of today, so we've gone down substantially. And then it also gives you the annual covered payroll for each of these plans, and that's important because it gives you a sense of what they refer to as the volatility or potential volatility in rates when you have different investment gains and losses. With a smaller payroll like in fire of only $9.7 million, any changes to the asset values or like a substantial decline is going to have a disproportionate impact on their rates in the future, as it might, for example, under the miscellaneous plan that has more dollars to deal with. So again, this shows what it was at June 30, 2008. We have a funding status of the low 80s for all three plans. And like I said, we are probably in the 60s today when you look at the most recent valuation we received as of June 30, 2010. Any questions on that piece?
Did you have a question, Mr. White? Please.
Thank you. Where I was looking for this, and I couldn't find it. So where is it in this document?
62.
Page
62. Thank you.
Mr. Samario, so if the funded funded status right now, let's say it's in the low 60s, that means there's going to be a considerable increase in the contribution amount coming down the road, correct?
That's true, and we've seen that already in the last few years, just because of what's happened in the 2009 and 10. We've projected and they've estimated what those rates are going to be, and they are going up. They're still employing some rate smoothing techniques for a lot of that, so we're going to be seeing higher rates for a while. But yeah, we're seeing that reflected already.
Do you know offhand what the latest version of those increased rates is?
We do. I don't have it handy, but we do have that. We just recently updated a multi-year forecast for some recent rates that we got from PERS, not only what we know for next year, but also more updated estimates for the next couple of years after that. And so we're working on building our multi-year forecast with those new assumptions, but we can provide that to you.
Okay,
for
great.
Sure.
Thank you. Did you have another question, Mr. White? Please.
And I'm understanding that sort of part of our program coming in the first half of calendar year 12, that we're going to have a conversation about pensions.
That is correct.
Where we can dig into this
Absolutely.
more deeply.
Yeah, February 9th. That's
Great.
right.
Oh, February 9th. Great. Thank you.
Okay.
The next one is also what we refer to as a post-employment benefit. It covers everything other than PERS or pensions, because we already have disclosures. We were required starting about 4 years ago to disclose liabilities that people in the past, or we've not been required to disclose prior to that. And it became a big topic of conversation a number of years ago that there were these promises that were made to employees when they retired, like for lifetime medical, for example, is a good one. That were not being reflected anywhere in our financial statements. Obviously, the pay-as-you-go cost that we were incurring was reflected, but not the actual liabilities. So we're required to show these, and we have three categories of what are considered post-employment benefits. The first is what we call retiree medical. We are very fortunate that what we promise to our employees is a very limited amount of money. You have to be with the city for 15 years in order to vest, and it's got a cap on it. I think the max any employee can get is somewhere in the low $300 per month, and it stops at age 65, presumably when they can have Medicare coverage. Some cities have promised lifetime, like I said, full cost, and it's obviously a big number for them and big liability. For us, measuring that liability as of the current date, we have an $8.7 million liability. And it's the same concept. They kind of look at an employee and they make a projection. What's the likelihood they're going to be with the city 15 years and retire with the city? And they project what those payments would be when they retire, and they just accrue that back, and we measure that. The next one is what we call implied subsidy. This is a lot more complicated, and it's a much bigger number, and I'll tell you at the outset that to me that's really a theoretical liability, and I'll try to explain why. We have employees, retirees that are allowed to participate at City Council's discretion, which can change at any given Tuesday, but they participate in our group insurance plans, and they enjoy essentially the same rate as current employees do. So if they're 68 years old and retired, they're going to pay the same amount of money for their insurance out of their own pocket, however, but the same amount as somebody who's 25, just hired with the city, who's single and has no medical issues. And that's just the way that's the way the system works now. So it's been recognized and understood that those employees or those retirees are enjoying essentially a benefit or a subsidy from everybody else, the employees in the city, because they have a better rate than they would if they were separately rated and had to go out on their own and get a premium or pay a premium. So that implied subsidy we measure that because it is an obligation in a sense, and we measured it, and it's $24.2 million. Again, the fact is that on any given Tuesday we could change that. It's not truly an obligation in the sense that if the city were to close operations today, we wouldn't owe that money to anybody. We would just stop. The others we would, but this was more, that's why I kind of call it a theoretical liability. But it's something we have to measure, and it is a big number. In a theoretical sense, it's a big number, but it's just full disclosure of what that subsidy is. And then the last one is sick leave. It is a real liability. As you know, employees accrue sick time, and then when they retire, they can get a lump sum payment of that, or they can take it in the form of an annuity, but it is a vested leave, if you will. And so we always pay those out whenever people retire. And it can be a big number, but as of June 30, 2011, that number, or at least the evaluation date of 2010, that number is $3.6 million. So in total, we have $33 million, the biggest portion of that being that theoretical liability, as I see it, for the implied subsidy.
Sure. Back on the implied subsidy, does that apply to folks that are with the city 15 years? Is that part of that? It's just anybody who retires from the city?
Anybody who retires has the option and ability to participate in our group insurance program and pay the same premiums. Again, the city's not paying for that. They're paying out of pocket, but the premium they pay is similar to what I would pay or a 25-year-old employee would pay.
And is there a significant number of employees that are eligible for Medicare that's nonetheless use the private plan? Is there
Yeah, once they hit 65, my assumption is that they can reduce the insurance that they buy through our programs because they have Medicare.
Right.
So our biggest exposure, if you will, are the people who are retired prior to age 65. But there's still some portion, if they're going out and still participating, buying some insurance for whatever Medicare doesn't cover, yeah, they're still going to get that implied subsidy or the benefit.
Okay, thank you.
Any other questions on that piece? Okay. With that, I'm going to turn it over to Rich Kikuchi. Yeah. And he's going to talk about, again, what the auditors do, what they do, and what they've come up with in terms of the results of their audit.
Well, good afternoon. My name is Rich Kikuchi, and I'm a partner with LSL CPAs, your auditors, and I'm here this afternoon, along with the Finance Department, to present to you your comprehensive annual financial report and to briefly discuss the audit process. LSL has been engaged by the City of Santa Barbara to perform a financial audit on your June 30, 2011 financial statements. And you all got copies of that. I can see them right there. It's a relatively thin document, but I'll tell you, a lot of work went into putting that together. I think Ruby and Bob would attest to that. As far as the primary objectives of the audit, we spent several hundred hours, my staff and I, performing various audit test work in order to render an opinion on those financial statements, and that's actually a 2-page document in that CAFR, and that opinion is stating that we have determined that these financial statements are materially correct, and they are materially correct in accordance with government accounting, generally accepted auditing principles. Towards that end, in order to render an opinion on those financial statements, we also performed various tests of your internal controls and also on your laws, regulations, and provisions of contracts and grant agreements. As I mentioned, we've been engaged by the city to perform a financial audit on your financial statements. Now, Statement of Auditing Standards 114 states that the city also has responsibility as far as this audit relationship goes. We actually issued a 2-page SAS 114 letter to the city back when we were doing our interim engagement, and in that letter, it states pretty much what this slide states. As far as the city's responsibilities are, well, the city is responsible for the financial statement, and we're actually just auditing those statements. Just to step back a little bit, our firm specializes in the audits of cities. We audit over 60 throughout California. Most of my clients, I'm thinking over 90% of my clients, actually our firm prepares those financial statements for the cities. Santa Barbara is actually one of the very few that has the expertise and the ability to prepare their own financial statements. So I just wanted to throw that in there. But that really is, that's the way it's supposed to be. And so that really attests to the fact that the city really is responsible for those financial statements. Also, the city is responsible for establishing internal controls at the city. Internal controls being those policies and procedures that are set in place in order to safeguard the assets of the city. Also, during the course of the audit, the city is responsible for making all financial records available to my staff and myself. And also, the city is responsible for the design and implementation of detecting and preventing fraud within the city. And we perform various types of test work on fraud as well. And we felt comfortable that the city had established those procedures. Now, in regards to the audit process, I had about 5 of my staff here at the City Hall to not only assist in the preparation of these financial statements, but also to perform audit tests, to assess internal controls, and internal controls, as I mentioned, being those policies and procedures set in place at the city, not only to safeguard the assets, but also to detect and correct any material errors that arise out of the reporting system, the accounting reporting system. Our audit took place in basically 4 different phases. The first phase was the planning stage. As I mentioned, our firm specializes in the audits of cities. So even before we got out here, well, we had discussions with Bob and Ruby over the phone. We'd actually met with them. So based on our discussions, based on our research of the city of Santa Barbara, based on our experience with other cities, similar-sized cities, we had planned our audit overall before we even got here. Phase 2 is what we typically call our interim engagement. And at that time, we come out and we test your internal controls. Again, those policies and procedures that are in place here at the city to safeguard the assets. We did various types of tests on your revenue cycle, your disbursement cycle, your payroll cycle. We also did, we tested your cash and investments to make sure they were timely reconciled and in accordance with the city's investment policy. Phase 3, that's what we call our year-end engagement. We were actually out here in the month of October, and we were here for a couple weeks. And at that time, we really are centering upon account analysis, looking at the reconciliations, performing reconciliations, again, looking at your cash and investments. We did other types of tests. For instance, on cash and investments, we send out independent bank confirmations to your outside banking institutions in order to independently verify the year-end statement balances. We did things like cutoff procedures in order to kind of verify that revenues and expenditures were being recorded in the proper accounting period. And we spent a lot of time, a lot of hours on that type of test work. And phase 4 is really the financial reporting phase. And as I mentioned, the city actually prepared the financial statements, but it kind of was a team effort. We kind of worked together and bounced ideas and thoughts off each other. And so that there was a lot of effort that went into that. So as I mentioned, we did perform an array of different types of audit test work in order to render an opinion on these financial statements. And I'm happy to announce that we've issued an unqualified opinion, and that's a good thing. That's what you want. That means that without qualifications, I feel, our firm feels, that the amounts in these financial statements are, quote-unquote, materially correct, that they're good numbers, that you can make management decisions on those. Also, in regards to the audit, I mean, the CAFR, the Redevelopment Agency CAFR, those were the primary documents that arose out of our audit procedures. But there are a couple other documents that arose out of the audit, and which will be issued every year, and that is the management letter and also our auditor's communication letter. The management letter is commonly known as, well, it's a SAS 115 and it's the management letter. And if during the course of our assessment of internal controls or during our test work of account balances, if we see any weaknesses in the internal controls, any material weaknesses or significant deficiencies, or even if we have to make any quote-unquote material adjusting journal entries, or, for instance, adjust beginning equity balances, we would report that in that letter to you as either a significant as either a significant deficiency or a material weakness based on the magnitude of it. A material weakness is actually more in magnitude than a significant deficiency. Kind of sounds backwards, but that's the way it goes. But we issued that letter to you, and I'm happy to announce that there was nothing basically to report that we didn't note any particular weaknesses in the internal control system. The other letter is the auditor's communication letter, and that's kind of more standard in nature. We talk about accounting estimates or significant accounting policy changes. If we had any particular disagreements with city management during the course of the audit, we would note that to you. If we noted any fraud or any particular findings, we would note that in that letter to you as well. And so I'm happy to note that basically it's a clean letter as well. Things are always changing in the governmental accounting arena, and Bob and Ruby kind of already mentioned it. Over the last few years, there was three main GASBs that came out. GASB 31, where we had to mark up cash and investments to market. 34, where we put the fund financials into a government-wide, a full accrual basis, which Ruby had mentioned that. Bob had talked about the OPEB, and that was GASB 45. Things are always changing. Things are going to be changing again in a couple years in regards to pension accounting. An exposure draft came out in June 2011, and it's going to significantly change how pensions are reported on the financial statements. Currently, the expenditures are just recorded as paid, and that's how it's noted in your financial statement. As Bob noted, the liability, the unfunded liability, that's basically footnoted, and it's in that footnote. There's just really a push to be more transparent in everything that goes on as far as city finances go, and so the exposure draft, as I mentioned, came out on this again. And so the concept of this is that that unfunded pension liability will now actually not just be in the footnotes, but it'll actually be on a statement of net assets as a liability. And as you saw, it was a big number. A lot of my clients are concerned about that, but I think more of my clients are realizing, well, all the cities are going to be in the same boat. There's all going to be a big number on everybody's statement of net assets. So the GASB is kind of working on the mechanics of this pronouncement. As I mentioned, the exposure draft just came out in June. The plans for it is that it'll be effective for the fiscal year ending June 30, 2013. And so I know there'll be a lot of discussion before that. And so, but, it'll probably be a big number, and they're just people are concerned about pensions these days. It was our first year as your auditors, and first year is always the toughest. But I really felt that it was a smooth process, and I really want to thank Bob and Ruby for their assistance in the whole process. It was a lot of hard work, but I think, it finished off good. You got a great product in front of you. So I want to thank them and their staff, and I'm here to answer any questions on the audit process if you have any.
Okay, thank you very much. Questions from the committee members? Mr. White?
Thank you, Mr. Chair. You were just mentioning the gas, you called it GASB?
GASB, yeah.
GASB.
Governmental Accounting Standards Board.
Okay, and yes. that there will be changes in the works vis-a-vis pensions.
Yes.
And so will we hear about that can that be folded into our February meetings?
Sure, we can definitely include that. It is
Okay.
going to be a big change. I mean,
Okay.
just think about people's statements of net assets. They can be upside down immediately with one
Right.
change in
Well-
accounting reporting requirements.
And will that look also at the CalPERS assumptions of return? Is that part of what, in other words, one of the concerns there is their optimistic rate of return? That
If
they,
you're referring to the GASB, no. Their exposure draft and will ultimately become a statement and requirement for us. It's not about sort of second guessing what assumptions are being used by PERS. Those are always disclosed now, and they'll continue to be disclosed. It'll be just to say that whatever those liabilities are that they calculate, the unfunded portions, you're going to have to disclose those and show those on the face of your financial statements rather than just technically buried in a footnote.
okay. Thank you.
Mrs. Self.
The accounting rules that require us to report assets at the value today, those are the same sort of rules that have been imposed in the banking industry the last few years, isn't it? And
Yes, Mark, yes.
Right,
Yes.
and so they're subjecting government now to that. My understanding is it used to be that banks could kind of ride out the storm as you had a fluctuation in asset value, where now they're taken over
Yeah.
because of those same things. So I would imagine that those same rules applying to us would make our bond rating less. Has that potential?
Yeah, for us, fortunately, because we're not in the private sector, we have very strict rules on what we can invest in. And so we're not investing in things that have high volatility between, cost and market value. We've been marking to market, as it's called, for probably 9 years, 8, 9
Something
years.
like that, yeah.
So we've been doing this for a while. But still, even though we're disclosing that, it's not a big volatility or variation, whereas in the private sector, because they're investing in things like stocks and real estate, it's much more important that they disclose a true market value versus just a historical initial investment, amount. So it doesn't have too much of an impact on us.
Do our hard assets count as assets, like this building?
Yeah, so it's different than the market to market. Our capital assets are fixed assets. We always have, and my guess will always report those at historical cost, which seems really odd because if we bought a building 50 years ago, we're going to report that at cost less any depreciation. So a lot of the old buildings are probably not even showing up on our financial statements because they're fully depreciated except for any improvements. So, no, there's never been a desire to move toward a market value assessment of those because one of the big reasons for using historical costs is that even though it doesn't reflect truly the value of that, it's very objective. You can't argue with costs, whereas you start applying market principles or values to fixed assets, particularly in the private sector where they have a lot of capital assets, there's too much subjectivity that can come into play, and that's just one of the pervasive or basic principles of accounting: objectivity.
So
and
that is a
comparability.
market difference between how a bank needs to look at their assets versus a city.
No, actually, when it comes to capital assets, everybody in the world, virtually, at least here in the United States, has to apply the cost principle in terms of their capital assets. When I say capital, I mean buildings, land, equipment.
No, I mean as far as a bank with its assets, if it loaned $1 million and now it's worth $500,000, it's worth $500,000, not the
Yes.
million. So
Yeah.
they have seen a $500,000 drop in their assets, where this building is worth much more than its book value.
Right.
So that's, the apples and
That's true.
oranges of how
That's true.
we're comparing, sort of
Right.
safeguarding us.
Unfortunately, our approach or the accounting requirements are that we use cost, much more conservative approach because obviously values tend to go up and the cost stays as what it is. So it is a conservative, objective approach, and that's what accountants like.
Thank you.
Did you have another
I did.
question?
Thank you.
Please.
And sort of an analogous point that clearly the city is insuring itself, this building is insured, presumably. So somewhere there's a value, and in order to have proper insurance, there's going to be an appraised value of this asset that's closer to market.
That's absolutely correct. And
So, but this document doesn't relate to that. That's just a parallel track that's going on.
the insurable values, we definitely look at the replacement cost of things, and that's what we base our insurance on, but that's not what's reflected here.
Okay. And that would be something I'd be interested in learning
Sure.
about, just seeing how that parallel track, what it looks like, and
Yeah.
I think it might be helpful for council folks to just know those values as compared to
Yeah.
these the book value.
And we talked about that not too long ago with Mark Howard. We didn't get into too much detail of that, but the concept of having insured, values and all that. But we can get into more details, sure.
Mr. Kikuchi, I had a question. I realize this is LSL's first year on the job, but we had a situation in the police department where there appears to have been fraud. Funds disappeared from parking citation fines that were collected.
Right.
And you talk in here about risk assessment for internal controls. Is there some way that that the audit process could have caught something like that, or do we have any assurance that it will catch something like that in the future?
Well, just, the audit process is, we don't look at every transaction in the city, but we look at, we look at the higher risk areas. As far as the planning process goes, we get information what's transpired in the past, and, part of our planning process was, that was made known to me, what was happening in that particular incident. And so, just by auditing cities, I kind of know where the higher risk areas are, off-site locations, cash transactions. So we tend to spend more, we keep an open eye more on those areas that are higher risk. That goes into our planning process as far as where we're going to spend the most time, because we're allocating hundreds of hours and, should we spend it here, should we spend it there? But then also from year to year, we're going to rotate. We're going to be looking at particular different areas. And maybe it isn't just fraud, but maybe we can make suggestions on how to tighten up internal controls, or we can share best practices as far as what other cities are doing. I'd like to give you assurance that we would always catch everything that would happen in the city that went against internal controls, but I can't say that, But I think we do a pretty good job. I think we know where those risk areas are, and I think we pay our attention to those areas.
If I can add to that.
Please.
So clearly, that was occurring before they started their audit process.
Right.
One of the things that we talked about, and I learned from talking with Rich, is that part of their audit process is they look at certain departments where they're collecting cash remotely that are outside the finance department, because a lot of the focus is in the finance department. We collect a lot of money there. But there are departments who collect money remotely, and part of their audit process is, and just normal strategy, is to look at a couple of those a year so that they're rotating through. That's something really that wasn't done as much with the previous auditors, where they were looking at other departments. They did that to a much more limited degree. So I think that having done that, or if we had done that a little more carefully with our auditors, where they're looking at various departments who might have seen some weaknesses or some holes. Unfortunately, we didn't get to that. We didn't see that.
How many areas are there like that where there's significant amounts of money being collected outside of finance?
My guess is there are probably 5 or 6. There's some, like if you think about downtown parking, they obviously collect a lot of money, and it's all in coins primarily, or a lot of it's coins. Same with Waterfront. They have a parking operation. Community development does take some money here at the counter, along with Public Works. Parks and Recreation has different locations, but they're to varying degrees, and so we're going to be focusing on those areas where we see the most amount of money, and then working our way down to where perhaps there's a little bit of money being collected. Maybe not great internal controls because of lack of staff, but our exposure really is where we see the big dollars. Think about $4 million coming into the downtown parking operation. That's an area where we want to make sure that they have good procedures and good internal controls.
Okay. Thank you. Any other questions? Thank you, gentlemen.
All right, thank you very much.
Meeting adjourned. Oh, did we need a motion on this?
Just to forward it to accept the report, or forward council's, recommend council's approval of the report, I guess, is what we would ask for.
All right, may I
So
have a motion?
moved.
All those in favor?
Aye.
Aye.
Thank you.